Good evening and good morning, based on wherever you are in the world. It's Mr. Intermarket Analysis again, and that's what I think I'll be calling myself going forward, Mr. Intermarket Analysis, because somebody really needs to start to propagate this old school philosophy of obviously observing the markets in real time. It's not just as easy as observing one variable. You have to look at the market from a holistic approach. So very, very important. And I'd like to carry on the work by Lewis Henderson and obviously Mr. J. Murphy as well. Okay, so basically what we're looking at today, we're going to observe the US markets, just see exactly where they're headed, where they are at present, etc, etc, and try and obviously approach it from an intermarket analysis perspective. As you'll appreciate, there's only so much I can do in one video, and I'm trying to keep these videos as short as possible so people can digest them and be ready for the next trading day. Obviously just start off showing my website again, inter-market-analysis.com. I do post charts on here as well on a daily basis. I'll be posting obviously my videos on there on a daily basis as well. There's a lot of material, there's obviously videos that I upload as well, interesting videos, especially for day traders. There's a recommended reading book section, so if you get some time, certainly visit that, and there's some links on there. Certain books that I've read, obviously gone through and have helped me in understanding especially the approach of intermarket analysis, so that will certainly come in handy to you as well going forward. Okay, so let's start with regards to analysing the US markets. Now at this very moment in time, I think the most important variable right now, full stop, really is the VIX. Okay, so what exactly is the VIX telling you? And what is the VIX? The VIX is a fear gauge, basically, or volatility, or measures volatility and fear in the markets. And you can clearly see that it's got an IHS formation. Okay, so it's no longer making lower lows, lower highs. It's actually putting a higher low, obviously today, and it held that low, and it's on the verge of a breakout. Now this is interesting again, because we're observing obviously intermarket analysis here. So we're allowing, and it's giving us the ability to observe alternative variables in order to forecast the variable at hand, which is obviously the US markets. So that's basically what that teaches you. Okay, so VIX at the moment has an inverted head and shoulders. It's coincides with the US data tomorrow. Surprise, surprise. Okay, so hopefully you can put one and one together there. Obviously with the NFP data coming out tomorrow, a lot of other information that's due to be released because the US has been shut down. From my perspective, it's all rigged anyway. They probably already have access to the information, and the VIP people have already got access to that information already as well. So that's the important thing there. Okay, so that's the important thing there. Now, from my perspective, obviously, if this VIX does play out tomorrow, which I expect it will, it should hit the 200 MA. That obviously causes the risk-off scenario to occur, and obviously stock markets are down. So just bear that in mind, keep that variable at the back of your mind, and I'll obviously try and exert other variables as well, which are inverse to the IHS. You'll see H&S formations in other markets, which again, based on intermarket analysis, is confirming which way the markets are going to move on the morrow. Okay, so let's start by looking at some of the daily charts. So first of all, the Nasdaq. Obviously we've got a diagonal trend line resistance. It's printed the first doji in a long time. We've had this thrust higher from 3120 all the way up to 3380, and that's a ridiculous move based on what? Nothing. Okay, other than hot air. Obviously the fact that Miss Yellen's been sworn in, easy monetary policy, all these banks, fraudulent banks, basically have 0% money. Even a little child can make money from 0%. Okay, so obviously these individuals have 0% and they've got nowhere else to put the money. Mr. Bernanke and Yellen obviously are forcing them to put that into the equity market and cause the equity market to rise. So that's basically what's happening there. It's a big Ponzi scheme. Realistically, if you want to try Madoff, then unfortunately you have to try Mr. Bernanke and Yellen as well, because that's exactly what they're doing. And that's why Mr. Carney is not a big fan of QE. Okay, so he doesn't believe in the Ponzi scheme. He believes in organic growth. That's the most important thing. That's one of the reasons why the UK is lagging all the rest of the markets in the world, because it's actually, don't get me wrong, it has been going higher recently as well, but it actually represents reality. the FTSE 100 index is actually representing reality as opposed to obviously a mirage with some of these US indices. I mean, these moves are ridiculous right now. But again, you know, the Y2K crash happened for a reason. Obviously, individuals get euphoric and ecstatic and so on and so forth. I mean, you've got Google surpassing 1,000 books now. Talking about Google, I mean, I'll be obviously observing other charts as well. One of the most important ones will be Apple. And Apple tells its own story as well. If you look at a chart of Apple, you have a weekly chart there. Obviously, you had this left shoulder, head, right shoulder. We broke down, we broke lower. We hit the 200 MA, obviously, we had a double bottom there. And then obviously we bounced. So you've got a large H&S forming now as well. You're retesting a neckline. If you go to your daily chart, you slam bang into gap fill resistance. If you focus on your gap there, you've got a gap fill resistance here. That's exactly where we've obviously hit into, which again confirms the thesis that the VIX, or which we discussed earlier, has an IHS formation. Therefore, if Apple is into resistance, the global stock markets are into resistance, because the Federal Reserve controls or manipulates the stock market via the Nasdaq and via Apple as well. Okay, so all that 0% money that's been given to these banks fraudulently and used for as a Ponzi scheme is generally pumped into the Nasdaq, and they inflate the markets higher. The Nasdaq obviously is quite heavily weighted towards the S&P and obviously the Nasdaq itself. Just like the BP is heavily weighted towards the FTSE. So if you can manipulate the heavily weighted stock, it's very easy to manipulate the stock markets in general. Okay, that's just the way these Federal Reserve or central banks manipulate the stock market. So that's another story. I'm not going to go into that, but it's very important for you to be aware of the manipulation that obviously occurs. And obviously in the last 9 days it has occurred a lot, and unfortunately, fortunately, not unfortunately, my model doesn't employ a strategy the way it can take into account manipulation, because manipulation is not natural, and it doesn't occur 52 weeks in a year. It occurs 3, 4, 5 weeks, and you can't base a trading strategy based on manipulation. There's nothing in the world that can account for it, because manipulation is an exogenous variable event, and any correct or accurate forecasting model can't take into account exogenous variables. All it does is takes into account the endogenous variables, those variables in the system, not out of the system, because any variable out of the system is a wild card. It's impossible for you to predict and forecast. Okay, so all we can do is take into account the variables that are within the system, i.e. the stock market. So we can take into account technical analysis, fundamental analysis, the news flow that's available at this very moment in time. Okay, so let's just skip this now. Let's go back to our US indices. So obviously the Nasdaq is into resistance, which we've concluded on the larger time frame. The Dow Jones, again, horizontal resistance. It's below the 75% fib retracement resistance. Okay, you can certainly argue here potential for a H&S formation. You've got a double top head, left shoulder, right shoulder's going in right now. Slam dunk, down we go. Especially given that this whole move here has been nothing but hot air. So you've had the US debt ceiling, you've had America downgraded, GDP, 1% of GDP lost due to the shutdown. Obviously the confidence data, the confidence, consumer confidence, all the economic data that's due to be released, and this whole right shoulder is all based on false expectations of QE, and reality QE hasn't solved anything. What has QE solved? So it hasn't created obviously employment, it hasn't increased GDP. So again, you know, it's one of those where do we go down the fiscal route or do we carry on with the monetary route? And obviously Mr. Einstein did state that the definition of insanity is doing the same things over and over again and expecting a different result. And hopefully, let's just hope that Mr. Yellen has more common sense than Mr. Bernanke and doesn't go down that route. But again, we have to deal with it as it comes. Again, my model doesn't take into account any manipulation, which is QE, obviously, but I just trade what I see. And what I see right now, obviously, we've got a potential for a H&S formation now. The other tricky variable right now that's not obviously in concert with the market is the Dow Jones Transportation Index. Now, they do say that this leads the stock market, which is true to a certain extent, okay, but if the Nikkei and Shanghai aren't leading, then this shouldn't really be going higher from my perspective. The only reason why this is going higher, and an explanation that I can give, is a drop in oil. Okay, so if I bring up an oil chart, obviously transports are generally have an inverse relationship with oil, obviously due to the cost factor involved, etc. And obviously you can see a H&S formation on oil. you've got a target of around 98, 97.5, which I've called for weeks and weeks now, to be honest with you. In the last 3-4 weeks I've been calling for this pattern here, especially when it was at the neckline as well. So obviously the pattern's playing out pretty well given the global growth story. So you need to ask yourself, all it is usually the leading indicator, and if the leading indicator is telling you that there's global growth isn't there, hence the reason why there's not much demand for oil, and oil is obviously creating a H&S formation, is breaking all types of support, etc. And again, along with copper as well, if the stock markets are so bullish, why is copper not breaking out to the upside? Why is it sort of, I mean, it's creating lower lows. No, it's not creating lower lows, but it's got a lower high at the moment, although it has created a higher high in a symmetrical wedge. You can argue, okay, we've got potential here for IHS, but why isn't that played out in advance? Copper should be guiding us, not lagging. Okay, so again, there's a warning sign. Also adding the fact that Miss Yellen is in. You've had US debt ceiling downgrade. The Chinese data, okay, we all know it's manipulated, but even that didn't really allow it to propel and break out the wedge on the upside. So all warning signs from my perspective. If the market's so bullish, why is copper not over here? Why is copper not at 3, 4, 5, etc. dollars, etc. So it's just there's a lot of questions from an intermarket analysis approach. And also, if you add in the fact that you've got an IHS formation of VIX, doesn't bode well. Okay, so also if you add in the fact that we've got the US dollar index, which is quite important here. Let's just bring up the US dollar index. Where art thou? Okay, so the US dollar obviously is on a weekly chart here, and it's at critical support. So if obviously commodities are inverse to the US dollar, and commodities are obviously going to be going lower, and obviously the dollar will be appreciating as well. So another thing, or another factor to keep an eye on. I can go into USD CHF, and that alone should obviously give you an insight as to what's happening here. USD CHF did have an inverted head and shoulders formation in the morning, which was looking to break out the upside. It failed to do so. The pattern has failed, although it is building a base. That's the most important thing from my perspective. And if the USD CHF starts to move higher, then obviously the dollar will obviously propel higher as well. So this is something to certainly keep an eye on and see exactly if this plays out. But again, obviously it all depends on the economic data tomorrow. It's a wild card. So basically we concluded here that obviously if you've got the S&P as well, I'll show you it's got a doji pattern there. Okay, so it registered a doji. So again, that's at resistance. And the only one obviously that's propelling higher is the Dow Jones Transportation Index. But again, I've explained the reasons why. You do have the Russell 2000. Again, it's coming up to potential resistance here. It has been propelling higher, which is quite impressive. Don't get me wrong, that's something that we certainly can't ignore, and we have to respect to a certain degree. So although it is obviously quite a substantial move higher now, so again that needs a pullback as well, which is quite healthy. So we'll see whether it can hold the 10,000 or the breakout level here, which is 1,080, and if it can build a base there. Okay, so again, overextended. Everything really is overextended. So let's go to our smaller time frames, and hopefully we can get more clues there, as we always do. Now the chief is the Nasdaq. That's the one that I always observe and I always follow. So let's just bring up the Nasdaq, which is quite important. And you can see here, 10-minute chart, you've got a beautiful H&S formation forming now. Obviously we didn't put in a higher high base on today. We've got gaps, unfilled gaps below. You've got a gap over here. You've got a gap here, which I expect hopefully to be filled tomorrow. That's my expectations tomorrow, around the 3320 level tomorrow. H&S should fall lower. Obviously the H&S target on here, the high is 3370, the neckline's around 3350 level. So it does state that you will go to 3330, but we may well get, obviously, given the economic data release tomorrow, we could get a spike as low as 3310, which is gap fill, and also hits the 200 MA as well. So I can't rule that out. Now, obviously, the semiconductors generally tend to lead the Nasdaq. So let's have a look if the semiconductors are confirming a move. Yeah, I mean, you've got a bullish channel here. You've got two, obviously, bullish channel within a bullish channel. You've had a bearish engulfing candle. We've consolidated within the bearish engulfing candle, and there's a potential there for a bear flag formation on the 60-minute chart. On the 10-minute chart, you've got a H&S formation brewing as well. Again, you've got a downside target here, which is quite interesting on the semiconductors. Okay, let's just have a quick look at the 60-minute chart in Nasdaq, which we didn't observe. Yeah, obviously we've broken out of this upward sloping contracting wedge, I like to call. You've got obviously a gap level there, so you've got two gap levels to fill. Obviously you've had a bearish continuation pattern there, you've consolidated within the red candle. So from my understanding of intermarket analysis, either we get a risk off session in the Asian markets and causes the markets to fall, okay, or obviously we fall given the data, economic data tomorrow. So again, that's something that we're observing and understanding. And obviously the fact that the economic data has been pretty weak anyway. Even US housing data today was pretty weak. The German growth forecasts were downgraded last week. Eurozone PPI inflation data in Germany was quite high, which is a concern. Obviously it raises rates, and obviously rates have an impact on growth as well. So overall, the growth is definitely not there to justify these markets going higher. The only thing is it's stimulus, and there's a question whether or not stimulus can actually help, and also there's a question of whether Mr. Yellen is as dovish as we all make her out to be. So that's a tricky one tomorrow as well. But ultimately it's growth that pays, and it's growth that will ultimately lead stocks higher in the long run, as opposed to the QE junkies in the short run. Okay, so always look at the long term. So obviously the two patterns here on the Nasdaq and the semiconductors are definitely weak. Let's have a look at the rest. Okay, let's have a look at the S&P 500, which is the US top 500. So let me just bring up the chart here, the SPR. Again, you've had a key trend line that's been held for the last few days now, or a week or so. Although you do have gaps, the unfilled gap here, you've got an unfilled gap there. You had a symmetrical wedge, obviously pattern here, where obviously we've broken eventually we've broken the key bullish trend line. We've held the upward sloping trend line there. You've now created a head and shoulders formation, which again, like I stated, then remember the VIX that I mentioned, okay? The VIX had an inverted head and shoulders, and the S&P has a H&S formation. So that's no coincidence, okay? Adding the fact that you've got H&S on the Nasdaq and semiconductors as well, intermarket analysis is telling you that there's weakness coming, okay? So giving you a heads up. Again, you've got the gap that needs to be filled below. All gaps eventually close, so they act as magnets. You've got 200 MA below as well. You've had a lower high for obviously after a long time, so that's something that we certainly keep an eye out for as well. Okay, so let's just quickly look at the 60-minute chart of the S&P. Yes, you've got this key trend line here that's been held for quite some time. Again, like I said, you've got gaps, unfilled gaps below, which always act as magnets, okay, and cause price action to levitate towards that. Okay, so that's something that you always keep an eye on, and don't allow markets to continue rising. You had an upward sloping contracting wedge breakout. You've had a bearish consolidation pattern here. You've got a bear flag formation. You should eventually break and close the gap first of all around the 1730 tomorrow, and that's what I'm expecting to happen. Okay, and so that's on the 60-minute chart. Let's just quickly look at the next one, which is the Dow. Okay, the Dow Jones. The Dow Jones, again, same concept here. You've had this pattern holding up quite well so far. So you've had this symmetrical wedge over here, which is broken to the downside. Okay, you've got a key upward sloping trend line that's broken to the downside. You've got consolidation pattern here. You've created a right shoulder, the head's in. You're looking for a downside move. You've got a get unfilled gap below. Again, another H&S. Is it a coincidence? No, it's not. It's intermarket analysis. Okay, so generally tends to give you leading indicators as opposed to lagging indicators. So it's just an insight into how I trade and how I run the live analysis service as well. Details of the live analysis service can be found on my website, which I run because I share my trades in real time. There's a video on YouTube explaining exactly how I operate. So obviously this is the type of analysis and charts and commentary, etc., that I tend to give my subscribers on a daily basis on the FTSE, European, US, Asian markets, just to give them an understanding of how markets work and how I observe the markets on a daily basis. So eventually they can go on and obviously trade independently themselves successfully. Okay, so again you can see here this pattern here, again confirming the S&P, confirming the Nasdaq, confirming the semiconductors. So I can certainly go on and on, but I'm going to call it quits there. It's 20 minutes already, so always remember, wax on, wax off, risk on, risk off. Goodbye now.